Hello everyone and a warm welcome to this week's stock market update for May the 12th, 2026. Sorry we were not there last week. We were celebrating my birthday, so I had some better things to do. But we're back on track and let's have a look at what we saw the last update, where we thought a top was forming based on some slight negative divergence in the S&P's advancing declining line. However, as you can see, the advanced declining line was still in a nice uptrend, and divergence often takes a lot longer than just a few days. Most of the time, it takes about a couple of months before it matters. So what is next? As you can see here, this matters. So what you can see next is that we are now currently in May and the divergence has intensified. However, price has yet to respond. You can see here, for example, that we have lower lows and lower highs on the SPX AD line, whereas the S&P 500 itself went higher. So the S&P 500 went higher and the AD line went lower. Now this has happened before in history, most of the time about 2-3 weeks, and then it kind of corrects itself. Just as I showed in the last slide, it takes a long time before it actually matters. If you, for example, look here at the November-December top, and we're going to look here a little bit into the September-October 2020 top, then you can see that that divergence did matter a little bit. For example, here we went lower and the price went higher and we got a slight correction before the market moved higher. The same here, right? We had a top, and here as well we had a top, and then of course we had some divergence here going on and we got a correction, but again the market moved higher. And then here again we had some divergence, as you can see here, and this divergence was that this will eventually lead to a bigger divergence that's going to last months. Now remember, for example, the 2022 bear market had no divergence whatsoever. So it's not a requirement. We don't have to see divergence. It would just be really nice and make our life easier. For now, we track it. Remember, this is a condition, not a trade trigger. If you had traded this as I'm going to short the market, you'd be heavily on the water. So only use it as an informational purpose and apply it together with the Elliott wave as we're doing, where you're then looking at a move that is running out of waves or out of steam. So here is the daily chart of the S&P 500 going back to beginning of November last year, and we're tracking a impulse higher. You can see here the blue 1, 2, 3, 4, 5, 6, 7, 8, 9, and impulses move in 5, 9, 13, 21, etc. waves. And what we of course want to see here is a final wave 9. Today was a nice hammer candle, looks bullish, a little bit higher to about 74.50, and then a larger decline to about 71.50 before we move higher. On the hourly chart was nicely oversold this morning. That's a low risk buying opportunity, and we should now head higher to ideally somewhere around 74.50 before we see 500 going back all the way to the 2020 low. Now, as you can see here in blue, this is the rally into the 2021 high and then a decline. As you can see, the decline was 50% of the rally. Now the rally went from 21.90 to 48.20, somewhere around there. So I believe that is about 2,600 points, a little bit thereabouts. If we then take the same length of that rally that started in 2020 and ended in 2021 and add it to the low in 2021, we get to the exact same high at the late 2024, early 2025 high. I think that was somewhere around February 2025. Also here we then had at the end of April 2025 a 50% correction. So this rally and this drop is similar in price as this rally and this drop. Now, how is it going to? This is just to kind of show the concept. And after that, we should probably see a 50% decline, bringing us back to about 6,100 for this wave 4. So this wave 3 is underway, subdividing into an A, a B, and a C wave. Straight up is oftentimes a C wave. Just as straight down oftentimes is a C wave, as we had here into the April 2025 low. That was a C wave lower, and now we're a C wave higher. And as you can see, 77.87 is the 161.8% extension. of this black wave 1 measured from the black wave 2 low. So we're starting to get quite nicely in a zone where we expect from where a pullback has a large chance of happening. All right, so we're still expecting higher prices. Divergences are building, but those are conditions. They can get erased, though it looks like this will not get erased and eventually foretell us of a larger correction. However, strong rallies like this often take a little bit more time, a little bit more back and forth. We call those fourth and fifth waves before rolling over. And if symmetry continues, we're looking somewhere around 74.50 with an outside chance all the way up to 77.87 for this rally to fizzle out before we see a larger decline to the low 6,000s from where a final rally can start, because we have not seen 5 larger rallies or moves since the 2020 low. And all impulses move in 5 waves. 1, 2, A, B, C for a ending diagonal blue wave 5, 3, 4, 5. So that's what we have for this week. Take care, trade safe. Don't forget to like and subscribe. And if you want to get daily news, please visit us. Insights available in the market on your doorstep every single day. Take care, trade safe. See you all next week.